Property headlines are noisy right now. Rates are easing, rents aren't exploding, everyone's arguing about whether the market's back or still broken. The real question isn't where the market's going, it's how you win in the market you're actually in. Today, I'm sitting down with New Zealand's #1 financial advisor, Ziyang, to cut through the hype and talk cash flow, capital growth, risk, and what smart investors are actually doing right now. No fluff, no Instagram math. Let's get into it. Ziyang, you're on the front line with clients every day. What's your take on the New Zealand property market right now?
Yeah, Simon. So I would say the market is still relatively subdued. We're not seeing the growth that a lot of banks have predicted over the last 12 months. However, it's somewhat stabilized. Rates have come down quite a lot since the peak. We're sitting in close to 4.5% at the moment with most banks. So yeah, I'd say nothing too exciting, but we are quite stable at the moment.
A lot going on in the international market, a lot going on with gold and silver.
Yep.
Do you want to talk a little bit on that?
Yeah, I guess obviously gold and silver is they're real assets, and we've experienced gold and silver having all-time highs over the last month or so. What does that mean, Simon? So when gold and silver, when they hit all-time highs, it's really an indication of the confidence in cash, right? In the fiat currency. So it's not necessarily gold and silver moving up. It's actually the fiat currency. We call it debasement of the currency, right?
We've got the orange metal doing very well, and we've got the orange man doing some crazy things,
Yep.
And so that's obviously going to have an effect on confidence.
Yep.
People don't want to make moves when they can't see past, 6 months to a year.
That's right.
A lot's happening right now
That's
on
right.
the international stage.
Yep.
So that's definitely affecting all markets and very much local property markets. So tell me, a lot of our clients, and I know especially a lot of my clients, really chase cash flow quite a lot, but we're finding that that's something that's very hard to find, especially in the main centers. How are you helping clients?
Yeah, look, cash flow is something that is very important with property investing. It's not the only thing that people chase in property investing. Obviously, the end goal for property investing is, you want to be able to curate some form of passive income. You want to have a particular net worth, right? And that's through capital growth. Look, main cities, you're never going to be able to find your, super high cash flow properties. And the reason for that is just because the price of the property is going to be so high compared to the rent, right? So if you are chasing the cash flow, you'd be looking more in the regional centres.
Yeah. We always know that, obviously, it's much more dependent on the specific deal than it is location.
Yep.
But generally speaking, main cities, you're absolutely right? Like the cash flow is just never really there. So, do we have to choose between cash flow and capital growth? Is there a mixture? And what's important to consider? As maybe just be more specific to the individual,
Yeah.
right?
I think it's really more specific to the individual. If you're just starting out, then I'd say, having equity is a lot more important. If you don't have the equity, you can't make any plays, right? You can't do anything. So, if you're a bit more mature in your portfolio, you're a bit older, you've got a sizable portfolio with equity, then, having cash flow will be much more important in that scenario. Yeah.
It's probably the easier portfolio restructure as opposed to the other way around, right?
That's right.
So let's get into that a little bit. How are people or investors doing in this cycle whilst everyone's kind of inactivity? What are we seeing some of the guys that are taking action?
Yeah.
What are those investors doing well this cycle?
Yeah. Look, with property, in any cycle, the people that succeed the most are the ones who are actually actively in property, as opposed to sitting on the sideline and just waiting for the prices to rise, waiting for rents to rise. So what the successful investors are doing in this cycle, just like others, they are looking to add value, whether it's adding, increasing the cash flow or adding value to increase the equity on the property.
Yeah.
And when we say add value, what does that mean? There's a lot of ways where people do it. Obviously, you've got the simple renovation, add a bedroom. What else do you see, Simon?
Development,
Yeah.
I find that obviously that's the biggest space where people are adding the most amount of equity in deals is large scale developments.
Yeah.
But that's relative to where your portfolio is. You're doing a duplex can be a massive difference for someone if you're making 500 to 800K on a duplex in equity, and you've only got a net worth of 500,000. You're doubling your net worth, if not more.
That's right.
And so huge things there. And I think the most important thing, like you said, is it's individual, and people need to take action, have an A team around them to be able to know what they can do, what their capacity levels are. And, we talked about, that the person more mature and has the equity and turning into cash flow. People that are starting out and are wanting to purchase, say, their first investment property, how do they gain equity in this market? And
the first investment, like equity comes in a couple of forms, right? People, it's always about buying right. So we've seen lots of clients where they buy well, negotiate well, and it might take them months and months until they find the right deal. But then if they find the right property, there could be money on the way in, right? We call it instant equity.
Yes.
And then what they might be able to find a deal where there's a lot of value to be had. So maybe it's a block of units where the property is in a pretty poor condition, where they can spend a bit of money to add value. So if you're starting out, obviously the risk appetite needs to be a little bit higher in order to do this sort of things, but that's where the more of the gain's going to be had.
Yeah. One thing I was speaking to one of the clients previously about was the arbitrage effect, right? You have the likes of some of these, large scale investors pulling out, help to fill out spreadsheets on data points from TradeMe, from realestate.co.nz to narrow down the type of property they're going to be purchasing, and then they attack it, and they attack it with aggression. And they've got their numbers pretty down packed, and it's pretty hard to compete with that type of noise. And so what I'm finding is that a lot of people that are going in areas where it's not so much the hot area, and maybe it's a blind eye to a lot of people, they're getting in there, they're seeing things that others aren't seeing. And that's by a heap of different ways that you can do about it. But one of the ways that you go about it is by actually doing the work, like showing up to the building, looking at that unconsented work that the other people got declined on finance for, and figuring out a way to actually solve those problems.
Those issues,
right? And then also like twisting the knife in the negotiation, saying, like, that's going to be a real issue for me and your other prospective buyers, and we're going to have to lower that price, but knowing full well what it's going to cost you, having that confidence and that arbitrage is really the thing that pulls people ahead. So we talked about manufacturing equity. What about cash flow? What are some of the ways that you can manufacture cash flow? Maybe someone who's got an existing portfolio, maybe they don't want to take action right away, right now. What are some of the ways that they can increase it? Maybe they're feeling it, in terms of the cash flow.
I guess, well, when you have an existing portfolio, a lot of the times the existing properties aren't performing as well as they should. And when I say that, what I mean is when you purchased them 10, 15 years ago, they were doing pretty well. Now they've grown, let's say double or triple their value since you bought them, right? So when you now compare the yield or the rent you're getting against the value of the property, it's very low. So a lot of clients, what we see is when they have these sort of properties, they might look to trade these properties, right? So a good example, there might be a house worth $1 million in Auckland. It might fetch you, say, $750, $800 a week. If they were to sell that and replace that with 2 properties at the value of, let's say, $500,000, maybe you're looking in the region, say Rotorua, let's say Whangarei, just as an example, right? You could possibly get double the rent of what you're getting So you're not necessarily increasing your debt levels,
Mhm.
right? You're simply just swapping around your assets.
Yeah.
That's one thing that we see a lot of clients doing to increase their cash flow. Something else is, with your existing portfolio, some of the properties that you can add value to.
Mhm.
We've seen the new rules where if you add a 70 square meter granny flat, there's no consent, right?
Yeah.
People are doing that. People are adding, building on their own, on their existing sites to increase their cash flow.
Yeah,
Right.
yeah.
So yeah, a lot of ways where people are.
So don't be afraid to sell an old property, lock in the gains, especially if you're outside the bright line
Yeah.
test, take that equity and repurpose it, and then look at some of the assets that you're not willing to get rid of and how to increase the cash flow by maybe putting a granny flat on that.
Yeah.
Definitely some T's and C's with regards to no consents, no building consent, no resource consent.
Yeah.
Doesn't necessarily mean there's not things that you have to lodge, the builder has to lodge and things. So be sure to do your due diligence there. On that point, risk management. How are some of the ways that your clients are feeling better and being able to sleep at night, with some of the things that they're applying to their
So
portfolio?
the biggest risk for any property investor that has a mortgage is the inability to repay the mortgage. Right. That's what, my perspective, that's the biggest risk. The second risk is obviously the building itself. Right. If it's a lemon and it acquires a lot of structural issues where insurance is unable to pay, that's a second risk. Third is maybe vacancy. What are some other risks that you can see?
I think vacancy kind of works hand in hand with having the cash. If you can cover the mortgage whilst you're having that vacancy period, if it's longer than expected, then you're fine, right?
Yeah.
So having a good cash buffer,
Yeah.
right? That comes with structure as well, getting
Exactly.
the advice from the advisor, making sure that you do that cash flow planning, having a revolving credit facility in place.
Yeah, and obviously a lot of people, they don't plan for maintenance, right? So having that revolving credit is quite important because then you can pay for your unexpected maintenance bills. And every property will require maintenance, that's for sure, at some point, right? Structure, as you mentioned, revolving credit and being on interest only is quite important. If your interest only is coming up, maybe it's time for you to review your structure. Maybe it's you want to get that extended if you can.
For sure.
Right. So
yeah, having good insurances in place, making sure you know what you're insuring yourself for, understanding the landlord insurance, what can and can't be covered. I think that comes with having an A team around you, right? You want to have a really good property manager that can advise you on that, and then also you have property finders, maybe if you can't do it yourself, you're a busy professional, and then obviously you got your financial advisors, lawyers.
That's right.
One of the ones that I talk about a lot as well with my clients comes back to the instant equity. When you actually buy well and you create instant equity, that's actually a major risk reduction, because if the market comes back down, you're going to be at where it is, the value in terms of
That's right.
the current value. So you haven't lost out. Where everyone else loses 20% in the last cycle, you're back to where it is if you if you purchased under value at 20%. So yeah. So tell me more about some of maybe the common mistakes that you are seeing. Like we preach about this stuff both online and to our clients.
Yeah.
What are the things that people continuously, look past, don't listen, don't heed the advice?
Yeah.
What's some of the, say, worst case scenarios you've seen?
Rather than worst case, I think the key mistake people make is purchasing emotionally. They purchase because they think it's a good investment, right? Because it looks nice, because it's in a good area, because a big one is it's close to me so I can manage it, right? I do think it's really important when you're investing, you understand why you are investing, the numbers on the investment. Like, are you investing for cash flow? Are you investing for equity? What is the exit strategy for this investment? Are you holding it for 10 years, 15 years? And then,
I like that one.
right? So I guess the biggest mistake is also not knowing the opportunity cost of this investment, right?
Or not doing anything at all.
Yeah.
Right.
Yeah. Because the thing is, if you buy something, right, that will affect your next move, right? So people, in isolation, it could be a good property for someone else, because even if they bought this property, they can do a whole heap of other things, right?
Because they've got available equity.
And cash flow and serviceability, right? So, but then for you, it may not be good, because if you make this move, it will lock you up and you're not able to do anything in the future, and you might not even be able to realize the full potential of this deal as well.
Of the opportunity. Yeah. I'm finding also not doing the work in advance to have a clear understanding of your why, because it kind of hands on what you were just saying there is, you're doing it for an end goal. You're not doing it for someone else's goal. So someone else's, what they're trying to achieve may be different to what you're trying to achieve. And so when you get clarity on what the end position is, you're gonna come up with the options to get there, as opposed to just, oh, this is a good deal. Oh, my Uber driver told me to buy an investment property, So I appreciate you coming on the podcast today. I know it's short notice, but if you got to leave the listeners with one thing today, you want to summarize or give them some tips?
What's important is just to understand, like you said, the why and then the how, right? And always having a audit of your financial situation. And there's a lot of good advisors out there that can help you with that. We can help you with that at Mortgage HQ. It's simply just understanding your options, understanding, are you on the right track of where you want to be?
Great. So if you're ready to level up your property game, head to our website and book a session with one of our expert advisors. Don't leave your investment success to chance. Let's strategize together and make the most of this market.